Well, hey everybody, happy New Year almost. It's been a wonderful year doing this podcast with you, Paul, for the last year, 2024, and
Ditto.
ditto, going on 150 episodes or so. But we wanted to close out this year with really sharing some of our favorite client stories from the last year between Paul and I and all the 100+ clients we've helped over the last year. A lot of you are probably listening right now, so maybe one of these is you. So listen up. What are we going to hit on today, Paul?
Yeah, so we're going to hit on some entrepreneurship where people saw opportunity, and since they were putting capital outside of their 401k and paying high premium into dividend paying whole life, they were able to seize opportunity. And then we also talked about some people that had some unfortunate circumstances occur in their families, yet they had taken action prior and therefore were really set up for success. Regardless of the outcome, they are set up better than they otherwise would have been. So it's an important episode, and we like to do these things from time to time and cover what our clients, like real people, are out there doing.
Yeah, awesome. Well said. All right, everybody, enjoy. Hey, I'm Dave.
And I'm Paul.
And this is the Wealth Warehouse Podcast. All right. Well, hey, Happy New Year almost, Paul.
Yeah, happy almost New Year. How are you?
Yeah, thanks. Thanks, man. You got New Year's plans?
Yeah, we're going to be
in bed by 10:30?
Yeah, I don't. It's too old. I'm 45 now. I can't stay up that late.
Right.
Although we are going to go to midnight mass tomorrow.
You actually go at midnight?
Yeah, it's
they
like
call
11.
It midnight mass, but
It's 11 to midnight.
Okay, because we're recording Christmas Eve. So tomorrow
Right.
being So we're going tomorrow at like 4 p.m.
Because I don't want to get
church.
up on Christmas Day and go to church. I want to just get up, turn the fireplace on, and watch the kids open their presents and stuff.
What time do they still wake up? Super early?
Yeah.
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 I know. If it wasn't for the two younger ones, the 7 and 9-year-old, I'd be able to sleep in. But yeah, we're up. We're up pretty early.
Yeah.
But mimosas taste pretty good at 6 a.m.
But they taste good all the time.
Yeah. Yeah, they do. Yeah. Well, cool. Yeah. So you're going to be in Florida for New Year's.
Yeah, I'm going to Florida. Yeah.
Nice.
Visited our folks and nieces and nephews and my sister and
Whole fam?
and my grandmother as well.
Cool. Nice, man. I think we're sticking around here. I don't know. We'll try to stay up till midnight. The kids always want to, and then the little girls fall asleep before midnight.
Yeah.
All the other kids, they don't have a problem staying up late. But yeah, I don't know. We've been staying up late wrapping presents because we don't want to get stuck doing it on Christmas Eve. I'm like, let's do it now because we can sleep in tomorrow. On Christmas Eve, you can't sleep in the next day. You got to get up at 5:30 or 6 a.m. whenever the little feet start on the floor.
I think we did on the 21st, 22nd. We stayed up. Mainly, I just hand Tammy tape and I do the labels, and she does the lion's share of the wrapping. Because full disclosure, everybody, I don't like doing it, and she's way better at it.
I'm terrible at it.
So I went terrible.
I went downstairs last night to wrap some big presents that I was hiding in the mechanical room, and I get down there, and the floor is soaking wet. And I can't figure it out because there's nothing coming from, I don't see where the water's coming in from. It's just a giant, like the rug in the middle of the room is just soaked. So I took everything out of there, and I found this tiny little hole in the hot water heater line.
Yeah.
One of those tankless
copper?
heaters. Yeah. I think it might just be the PEX.
TV's. Oh, it's PEX. Yeah.
That
PEX.
one.
So,
that line. But it was just a little stream coming out, just the tiniest little stream that I could barely even see, but it'd been going for a few days and just soaked everything in there.
oh no.
So I got a...
Did it was it a cold water line?
No, it's a hot water line. Going to the tankless water heater. Yeah, so it's I don't know, little plumber's tape will fix that. Put a bucket under there in case it keeps dripping or something. We'll see.
Yeah, get that fixed properly.
Yeah, I know, right?
Anyway, all right.
Yeah, so that was fun anyway. But, well, hey, this is the last episode of the year. of
Yep.
2024. So this will be coming out just before New Year's. So it's been a good year, man. We've got a lot of new clients this year. I mean, between the two of us, well over 100 new clients.
Yeah.
And we've got some really good stories from whether they were brand new clients this year or clients who came back for another policy, or, previous clients telling us, what they're doing with their policies this year. So we thought we would just kind of recount some of the best client stories that we've had in 2024.
Yeah.
And we've got a lot of them. So we won't hit on all of them. So I'll just start with one who's a share client of ours, and I think we hit on this earlier in a previous episode. But this was such a cool story where a guy came to us. He's a doctor. He, wife, 2 kids, and saw the value in this, and he ended up having barely getting insured.
Yep.
Because of diabetes. But he was able to get insured anyway. Ended up getting policies on the kids and his wife. And the kids, we also added that extra option to purchase additional insurance.
Yep. OPI.
OPI, which gives the kids a guaranteed option to buy another, say, $150,000 of insurance when they're 22, 24, 26, like all the way up for 20 years. So it's great. You don't have to prove insurability again. Well, sure enough, like 6 months later, his son gets diagnosed with diabetes, type 1.
Yep.
And a little while after that, his second child gets diagnosed. And he couldn't have been more thankful that one, I mean, he thanked us, but I was like, no, look in the mirror, because you're the one that made this decision. You saw the value, you put it in place, you paid for that OPI for your kids, and now they're set. They're good.
It's such a huge relief because folks, for insulin dependent diabetics, and frankly, type 2 diabetics as well, the cost of insurance is higher, and it's quite a bit higher if you can even get approved
If you can get
for
insurance. Yeah,
Right.
And it is a lot higher because it may be a table rating, so you're going to be below standard, and yeah, every $1,000 of death benefit coverage costs you a lot more than it costs, the normal, the average person out there who doesn't have any, health issues.
Correct.
Yeah.
Yep. Yeah. So I echo what you say. Spot. He is the one that, I guess, found our podcast, discovered Nelson Nash's message, did the work, did the reading, did the research, and then took action, right? Because it's all just conversation until somebody cuts a check for a premium, and and he pays significant premium relative to his means. So good on him, and I'm so thankful, that, and I know he's thankful, but I'm thankful for him. And his family, just phenomenal. Because again, like, those kids are going to have to buy more insurance on top of what we have put in place for them. However, they have this ability to at least buy it at standard going forward, which is nice.
Yeah. Right. Yeah. So that's a great one. What do you got? We don't always work with the same people, so you've got clients.
Yeah,
I've got clients. We've got shared
I've got
clients,
a mix.
So
Yeah, I think I actually picked. I just went through my book of business and picked up a bunch of folks that they're actually not shared clients. So it's anyway. So I have 2 clients that I've known a long. Oh, I've known her the majority of my life since we were teenagers, and they were my first clients actually in this business. And in fact, I have my first commission check up here. I actually kept it, and but anyway, so both military people, good savers came to me. We were all living in the same neighborhood. I think I lent them my book, and I was like, "You gotta read this. Like, you're doing great, but you could be doing better," because they were cash. They bought their house in Kentucky for cash.
wow.
and they
Yeah.
sold that and rolled that and paid cash for the next time. And they've done this over a career, so they've got a ton of cash. And I was just like, man, they're just bleeding. There's opportunity cost loss, right? And if I could get them to see that, I can help them. So anyway, they became my first clients, paying significant premium. Although still need to open up policies on their kids. But they're in the early stages of building their forever retirement home post Army life. And of course, the question comes in several months ago. Hey, Paul, just so I want to check in with you. What do you think about this? I would like to take a cash value loan to fund like the down payment for the land or whatever it was. And I was like, dude, that's exactly what Tammy and I have done. That's phenomenal. I'm glad you're able to do this. And I think their plan is as well, once they sell their current home, which they hate, they will, have that additional cash as influx as well to repay policy loans and replenish that pool of capital. So, opportunity that, they still would have seen, but they're more efficient now because they're using cash value policy loans from whole life insurance instead of just paying cash. So the
Right.
money's doing multiple jobs, and that's great to see.
Yeah, now they've got two assets with the same dollars instead of just one, the house.
That's right.
They've got permanent death benefit. That's awesome. That kind of leads straight into the second client I thought of, who a bit similar, but he's about 60 years old. He's got retirement staring him in the face, and probably the next 3 to 5 years. And he and his wife just sold a primary residence. They cashed out hundreds of thousands of dollars, and they had the option to take all that money, that cash, and go buy their retirement home with cash. But before doing that, he wanted to talk to me about maybe some other options. So he decided at the end of the day, we worked together. We worked pretty hard on this case, throwing some different scenarios at him and showing him, hey, you could put all of that money into a policy, PDF Max, and go get a mortgage on the house. You could go get a mortgage on the house, not put anything into a policy, or you could do half and half. So after talking with his wife, what they really decided on was about 50-50. So they took about half that cash, started policies on the family members, and the other half, put it into the retirement home and took out a mortgage on the remaining amount. So now he has a mortgage payment. But guess what? 5 years from now, with the policy that he's funding, and he has the capability to continue funding that with his current cash flow, in addition to that big a lump sum he was able to put in on top of that cash he had, he'll be able to pay off that house in 5 years if he chooses to. So by the time he retires, he can have his house paid for if he wants to, right? He'll have the cash value. But it doesn't, maybe by that point, he may say, yeah, let's pay off the house. And then the only loan we have is the outstanding loan on our policy, and we repay that as we want, whenever we want. Or he may say, you know what? Maybe we'll just keep the mortgage. We have the ability to pay it from our retirement funds, and we'll keep that cash value available for other opportunities. So he's going to have more choices in retirement.
Yeah, just more flexibility. For the policy setup, did he prepay over several years using one of those riders like the PDF Max, for example, or did he just did you guys do more like a single lump sum of PUA plus an illustrated annual premium on top of that?
We did that because he wanted access to that cash.
Okay.
So we could have gone either way, but we added some extra PUA to all the policies that were put in force, and just created more available cash.
Right.
Should he want it or need it.
Yeah, and it gives him some more term, death benefit as well. So that's nice to have, regardless, right? It's nice to have that death benefit in place.
It is. And now when he retires and he loses all of his term insurance, or it expires pretty soon,
Yep.
he's got this asset, which is permanent death benefit, that's going to be there for his wife or his kids, or both. And then he'll also have the retirement property. So pretty cool.
Yeah, that's awesome.
Yeah.
Cool. All right. So my next one are, again, two people that I've known a long time, over 20 years. And again, some of my earlier clients, my first year of in the business was 2020, and these are some of my earlier clients as well. And one just retired from the military, one got out of the military as I think as a major maybe or a senior captain, and he's a very successful guy, very smart, very good friend of mine. And she's extremely bright and successful in her own right. She's a nurse anesthetist. He was an infantry guy, and they started. She got into aesthetics, where like facial things and
Oh yeah, yeah. Like a
injections
med
and
spa.
like a med spa,
Yeah, my sister
exactly. Like
owns one.
yeah, exactly. Like very, very boutique-ish, very high end, just very nice. And she's a perfectionist. She does a very good job. And they have had to acquire some pretty expensive equipment
Right.
in some cases for this, as you probably know from your sister. And and I don't know what these machines do. Suck your face off or whatever they do, right?
Yeah.
And again, they pay very significant premium and have been before they get out of the army or before he got out of the army. She was already out, but paying significant premium relative to their income. And then, fast forward 3, 4, 5 years later, built a custom home, launched a small business with significant capital outlays, and now, have replenished policy loans, have the flexibility within the business to do what they want, and are now opening up 3 more policies, to expand their system. The business is doing great. He's got his, retirement job. He's doing very well. So expanding their system to accommodate additional income, but also maintaining that liquidity and that death benefit that they need. They're both parents. They get 2 small boys. So opening up more policies on her, on the kids, and that's, seeing opportunity and being able to take advantage of it and using their God-given talents to do what they're good at. And to and they've got some great clientele, right? And that keep coming back for whatever they do.
Oh yeah. Yeah. That.
Boat, I don't want my I got these crow's feet going on, right? I don't
Yeah. I don't want to get old. Yeah.
Right.
So that's such a cool story because they were able to start a business with a lot more confidence and from a position of strength. They didn't have to go out and find an investor who may have taken some equity in the business.
Sure.
They didn't have to go to a bank and fill out all that paperwork and give them who knows how long that would take for a bank to give them a business loan.
Well, you know what? That reminds me. There's some detail in here that I think people and you'll find very interesting. When they were applying for some third party financing for some other things because their policies are still fairly young, so they don't have they can't meet all of their needs yet. They can meet a lot of their needs. But guess what these banks were requiring them to have?
Cash reserves.
Cash
Or
reserves,
death benefit, life insurance.
death benefit,
Right? Yeah.
life insurance.
Yeah,
And
they
they
want
ended
to
up
know
having
how they're getting paid back.
That's right. And I found that to be, we were just he and I were just chatting about this the other day, and I was like, wow, isn't that interesting?
Mm-hmm.
And luckily, they have significant death benefit, but the banks were requiring even more. So again, now he's in the process. They got some other those things you can go online and get some cheap term real quick or whatever.
Yeah.
But now he's in the process of getting some additional convertible term over here, so that they can expand their system when they need it.
Yeah.
But it was just amazing. I was like, see, look at that. Good on you for reading the book back in 2020, 2019, whatever, and taking action and putting money where you could get at it. And oh my God, now you're in line with what the banks wanted. You had cash reserves and you had death benefit. So
Yeah. Cool.
yeah,
All with one product.
one product. You want,
Pretty cool.
yeah, we want everything that whole life can provide. We just don't want it after we discover that it's whole life insurance.
Right. That's basically what it is. Everybody wants exactly what whole life provides until they hear it's whole life insurance because of everything all the misunderstanding they have about what this product actually is and how you can use it in the process of banking. So I've got a client. He's an old classmate of mine from college days, and I don't think I've spoken to him since we graduated. But he called me up earlier in the year. Somebody introduced the podcast to him. He lives in Germany, so he's one of our listeners over in Germany. Well, he wanted policies. Problem is, you got to be in the U.S. With most companies in order to sign an application and sign for the policy. So they want you on U.S. soil. Going to a consulate doesn't count,
No.
which blows my mind. I'm like, that's U.S. Like fish. Technically, that's U.S. grounds, right? If you just go to the
Yeah.
U.S. consul,
Yeah.
consul.
Yeah, it is.
But no, that's not good enough. You got to be stateside on the dirt, on the land. So he had a vacation plan to come back home and visit family. So we did all the, did all this pre-work. I got a hold of underwriting, said, hey, here's the deal. I got somebody coming home. They're going to get their medical exams done as soon as they land, or like the next day after they land stateside. I need to push these policies through in the next like 2 weeks. So we kind of front loaded everything, got them approved, got policies issued before they went back over to Germany, which they're going to be over there, like in a year and a half, I think, before he planned to come back home. So I thought that was really cool. And he's just about to retire from the military, from the Air Force. So he saw the value in putting these policies in place before he gets out, goes through, VA, disability,
Yep.
that whole process, and likely becomes uninsurable.
He's in the Air
Maybe
Force.
not.
He'll be all right.
Yeah, yeah, maybe. But worst case, he does become uninsurable once the VA gets a hold of him.
Sure.
And but he's got the policy in place, so it's all good. So I thought that was just a lot of foresight and intentionality on his part to make sure that got done while he was home. And did everything he could during that break to make sure it happened for him and his family.
Yeah, that's awesome. That's a nice success story right there. That's some quick underwriting too.
Yeah. Yeah. So it can happen. I mean, if you got all your ducks in a row.
Yep.
Yeah, it can.
Cool. Okay, so my next one, also somebody I've known a while, and I think you know him a little bit as well. But this guy now has 6 children, and he's a listener, so he's going to know I'm talking about him. Now has 6 kids, and and they all have whole life policies, of course. And this guy, couple years ago, started a business. He quit his W-2 job and started of all things, a teeth whitening business.
Yeah, I know this one.
Yep, you sure do. And I remember, seeing it on Facebook and talking to him. I was like, wow. And then he's like, Paul, I was able to replace, my other income and he had a good job. And then some, as an entrepreneur, and he was, thankful that, I think part of being a person who practices IBC is you rethink your thinking.
Mm-hmm.
And this gives him, being an entrepreneur. Yeah, it's tough. There's really no days off, right? You have to hustle. You have to have the vision. You have to take risks in some cases, right? Or in most cases. But this also has given him the ability to make his own schedule. And because, he's got like 4 kids under 6 or whatever, so it's busy. And so it's just a great story. And he's into our business a little bit as well. And has, helped some people discover the infinite banking concept as well. So, but again, just the mindset switch that I think that people have when they start putting capital where they can get at it is amazing, and that's just another great example.
I tell you, people realize pretty quickly it trumps having access to capital trumps your capital. Not having access to capital that's maybe earning a return in the market or something like that. Like they say, the value of having access to that capital in many cases can outweigh any rate of return you might be earning somewhere else on that capital
Oh, for sure. And
when it's locked away.
yeah, like the value of a dollar you can't spend is zero. So yeah, you might have $1 million in your military TSP, your civilian 401k, whatever. And people are like, well, there's a loan provision. Like, yeah, I get it. You can take 50 grand or half the account value, but no more than 50. So that's not going to help you. It might help you, but it's not going to help everybody. And there's a repayment schedule that you don't control.
Right.
And you interrupt compounding or growth of that money that you took out, right? Because you are borrowing, in that case, your own money.
Yeah.
When you take a cash value policy loan, you're borrowing the life insurance company's money, and your policy is untouched. So anyway, yeah.
A lot of value there. So here's one of my favorites. It's not the first one I've done, but it was a 1035 exchange from an IUL. So
Ooh,
IUL,
love that.
yeah, the Index Universal Life policies, which a lot of the noise you'll hear out there online when you search infinite banking is you'll see people promoting it using universal life policies.
Run away.
I've never sold one. I don't own one. I never would. And it's certainly not something I would ever recommend for the purposes of infinite banking. Neither would Paul. So, but this guy had been funding this IUL for, I forget how many years, a number of years, maybe decades, and realized he had a lot of cash value, like hundreds of thousands in cash value. But realized, man, it seems to me that this thing's not getting better with time. And, when I retire, it's actually going to be not a very good thing. And I want to get out from under this. And I'm beyond that penalty window. There's usually a 10-year window where...
Yeah, so he's owned it for a while.
He's owned it for a while, yeah, beyond 10 years. So
wow.
Once you're beyond that window, when you're inside of that, and we have a shared client who had signed up and it was like 1 year in to it, and he just bit the bullet and said, I'm out. I'm getting out of this thing. I'm going to take the surrender penalty, whatever that is, because I'm going to take this short-term pain because I know it's going to be a bad thing for me long-term. So anyway, this guy did that 1035, which is an exchange where you can transfer cash value from one life insurance policy to another without any tax implications because he had a gain on that. So he had more cash value than he ever paid in premium.
Oh, well, there's a surprise.
If he surrendered it, he would have had to pay taxes on that gain.
Right.
Well, so instead we do a 1035, which means he doesn't have to pay taxes on the gain. And he was able to convert into a really nice whole life policy that's only going to get more efficient and less expensive over time. Right. It's going to be a great thing for him. So that's one of my favorites. Anytime I can rescue somebody before it's too
IUL
late.
rescue.
Yeah, IUL rescue. That sounds like a TV show, like Rescue 911. Yeah. Rescue IUL.
And that's really what you did, Dave. It is really a rescue. I got into this YouTube debate I guess it was us commenting on some channel or some video. In this case, I think we agree with Dave Ramsey. Now, folks, caution. A lot of times the financial entertainers will lump dividend paying or regular whole life, whatever, but whole life insurance in with universal life because they're both characterized
as permanent,
as permanent insurance. Right. I have a problem with NAIC or whoever calling universal life permanent insurance.
Me too.
Because it's annually renewing term with a side account unbundled. It's not like meaning the side account that where your cash is, it's not a cash value, it's just a cash side account, right?
Right.
Is completely unrelated to the death benefit.
I mean, it's permanent as long as you can pay the ever-increasing amount of premium until the day you die. Then, of course, it'll be permanent.
Correct. And what this guy I was debating with was saying, he's like, well, it's not designed for legacy.
It's life insurance.
And I'm like, I go, what the? I go, what? Okay. But, so their idea is you just keep shrinking the death benefit to avoid the premium increasing to an unaffordable level. in
So
the
it's not
anyway.
designed for legacy. So it's not designed to leave anything behind after you're gone, is what he just
Yeah,
said.
I guess it's
Okay.
right. I honestly don't understand the purpose other than they take it as a supplemental income
I'm sorry,
in a
there's no
tax.
way. There's no
I
way that can be more efficient than finding a different product that is designed to provide a lifetime income, like perhaps an annuity. Maybe
right.
that's a better play than a universal life policy that you
Yeah.
don't have any intention on being able to leave anything behind on the day you die. Like that's just yeah, it's brainless.
Yeah, we've done some universal life content on this show, folks, and it's I take Nelson's stance in building your warehouse of wealth. His second book, he talks about it a little bit, and it's just I never owned one, never sold one, will never, and that's Dave and I's stance. It's not appropriate for the infinite banking concept, despite what these other yahoos out there on the interwebs say. It's just not. So that's a little off topic, but just wanted to. It's an important point to kind of drive home because
Yeah.
they're terrible. I'm sorry, they're terrible. If they weren't
Yeah.
terrible, we'd own them and we'd be telling you to buy them.
Right. I own zero
Zero.
and never will.
Correct. Anyway,
Yeah. All right, we probably got time for one more each.
one more. All right.
Yeah.
Here's one that's here's one that's a little different, I would say. So these two clients, they were a referral from a current client. They ended up being my biggest clients as far as premium, total premium. And last year they were tossing around doing some sort of real estate investment. And and I talked with the husband. I'd spoken to both of them, but on this investment opportunity, I had spoken to just him about it, and I really am thankful that he wanted my input. I'm thankful for that. And I was like, and I think I gave him just some things to consider. And I said, hey, listen, brother, like you and your wife are two highly functioning, highly successful, frugal. I mean, Dave, they'd make you proud. Like
My kind of
frugal
people.
people. Your kind of people.
Fiscally responsible people.
Fiscally responsible, right? And I was like, you could do that thing. But my spidey senses, just based on what you're telling me, is you should run away from that thing. On top of that, I would say this. You guys, they have a very healthy income, way better than, their top 1% as a family. I was like, you don't need to do anything else. Just do this for now. There will be other safer, more obvious opportunities down the road. Right now, let's build some capital. Let's have some tactical patience, right? Like that pause that you talk about, Dave, when we have cash value, but the process of taking a policy loan, although very easy, gives us pause and
Yeah.
gives us something to think about. Do I really want to deploy this capital to that?
Right.
And of course, the answer was no. It wasn't a good opportunity. It just wasn't.
Yep.
And I think if you have to think, is this really a good idea? Like, it's probably not a good idea.
Yeah. Like you've said before, if there's any doubt, there is no doubt.
I stole that from.
That's deep.
Where did
Deep
I
thoughts
steal that?
by Paul Fougere.
I'll think about it. It came from a movie. It wasn't
Yeah, I
Under
know.
Siege.
Yeah, you mentioned a movie. Was it Steven Seagal? Maybe.
No, it was. It's Heat. Robert De Niro said it. In
Okay.
Heat.
All right.
You're welcome, everybody.
Yeah. Maybe I'll watch that over the break.
Yeah, it's a good movie.
Yeah. Well, that's cool. I'll leave us with this one. This is one that it's pretty powerful. This is a young guy, I think mid-30s, got within the last year a policy on him, his wife, his kids. Well, not too long ago, maybe a month ago or so, he called me up and he's like, "Yeah, man, it's been a rough day. We just found out my wife was diagnosed with breast cancer. And thank God she has that life insurance policy already in place. Not because, well, I mean, maybe he's afraid of, what may come of this diagnosis, but Also, the fact that there's no way she's getting another insurance policy anytime soon.
Nope.
So he was just thankful that he had the foresight. Now he was thankful for me, but I told him, man, you had the foresight to do this because even if your wife is staying at home raising those kids and is not out actively, earning an active income, it's going to cost you a lot of time and money to replace everything she does, which most of it's irreplaceable, of course. But so she needs insurance, just like every spouse out there. If you have kids, both parents need insurance.
Correct.
Period. But he was so thankful he did that. Not only that, he had decided to add some extra term insurance. He took my recommendation to beef up the death benefit with, about $500,000 of term insurance that could be converted at any time. So he's got that as well, because maybe she won't be insurable ever again. It's possible, right? An insurance company could say no, and you could say, well, I got $500,000 here. We're going to go ahead and convert this to a whole life policy now. So we get to keep this death benefit, and it'll go up over time, but we get to keep it forever. We don't lose it when it expires, when the term expires. And the insurance company just has to say, yes, sir, and write the policy, submit it, issue it. They've already guaranteed it. So I thought that was really cool. It's a little bit of consolation, in turbulent times to know that, okay, at least I don't have to think about what's going to happen to my family financially should the worst case occur. We've got that covered. Now we can put all of our energy and focus into everything else that needs that energy and focus right now. So just a really cool story. And I love sharing that with people because, God forbid it ever happens to anybody listening or to my family or your family, but it's a fact of life. This stuff happens.
Yeah. And, the bigger our book of business gets, Dave, and I think we're probably around 500 to 600 clients between the two of us now. And folks, that's quite a bit for the infinite banking concept business. Like that's quite a bit. And hundreds of millions of dollars of death benefit in force. But we start to now see these things. We see children unfortunately inheriting the wrong gene, or we see people getting ill, and it does happen. I had a client recently that was ill, and I didn't know until after the fact. We just had like an annual kind of meeting the other day, and that person was out of work, and I was like, you should have told me that. We could have kind of waiver a premium rider where they would have paid the base premium for us, right? And so you didn't have to worry about that. And then, once that medical condition ended and you went back to work, we can reinstitute, paying the premium. And, it's read your contracts. If you have any questions, please ask. But people get amnesia, right? You go over it and it's been 4 years, right? So that policy's 4 years old now. So people do forget, but, listen to this podcast. We have a new client as well. That just started to re-listen to the podcast, and he sent me a text just earlier. He's like, dude, this is just reinforcing what we talked about 1 year ago when I first reached out to you guys, of I want to control my capital, and this is where I want to control it from. He's like, it makes so much sense. Thank you for, anyway, just so we're glad to have him on board. And can I do one more?
Okay, go for it.
All right, one more. And this, I've encountered this a few times now where I have, elderly parents, right, in their, so let's call that the first generation in their 70s, let's say, and they've got some surplus income, whether it's they don't touch their Social Security or pension or whatever it is. They get some extra money. They want to kind of gift it, right, to the next generation or the generation after. So I have a friend who's kind of using some of that income to open up more policies on herself and then her siblings who have children, so that the grandparents are automatically kind of providing value using that income by paying those premiums on their own children's lives, and they'll own the policies as well. So it's cash value access for them. It's a future asset that will get handed over once that first generation graduates. And Nelson, of course, talks about that in the book, right? Where grandparents open up policies on their grandchildren and children, whatever. And this is, again, something that she only thought of once she became a student and, knowledgeable about the infinite banking concept and thinking generationally and thinking long range and controlling capital. So just not a very common thing, but we do see it from time to time.
Yeah, absolutely. So, well, I think I've thought of a few ideas for topics that we need to get into in the new year. So
Sweet.
we'll be bringing you guys some new content in 2025. And if you guys have any topics you want us to discuss or questions you have about this, feel free to email us. Emails in the notes, and always happy to discuss anything that's on your minds out there. So, well, until then, hey, happy New Year, everybody. Hope it's been a great one for 2024. We'll close this one out, but looking forward to what the next year brings us and all the new clients we get to work with and help serve in whatever way we can. So, all right, everybody, have a good week until we talk again next week. Control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.